Wealth Navigation Advisors presents Financial Tides.
Hello, everyone. Welcome to another episode of Financial Tides. Today is Wealth Navigation Advisors is going to go over Bitcoin. My partner and son Taylor is also on, certified financial planner. It's interesting. We called it Bitcoin, even though this is about cryptocurrency, and that's because Bitcoin seems to dominate the media and the face of this market right now. But it is a cryptocurrency. It's designed to act as a form of payment outside the control of one person, similar to the way other, non-dollar things work, but it has some unique features that we're going to go over today. It was introduced in 2008 by an anonymous developer or a group of developers using the name Satoshi Nakamoto. And since it's become the largest cryptocurrency in the world, which we're going to talk about that in a second because there's been a lot of them launched over the years.
Yeah. So how does it work, right? Everyone's like, oh, it's out there somewhere in the internet and it's just something that's a currency of some sort, but how does it actually work? And that's really just the fact that it's a digital asset. Yes, it's stored in a digital wallet. Yes, but each individual coin represents the current market price of each individual Bitcoin. So you can own partial shares now, either ETF form or actual direct holdings of individuals on some sort of online trading site. I don't want to mention any names and get it flagged in compliance, but yeah, you could own fractional shares. It's really common, especially now that it's over 100,000 a coin or fluctuating right around 100,000 coin. People own fractional shares more often than they own entire coins. But it's really, when you talk about how it works, it's the open source coding, which is known as blockchain. So blockchain is really common nowadays. You'll see it in a lot of other places. For example, when you buy a new iPhone, you get that little kind of globe spinning around on the screen with the different dots, and it says to transfer your data, scan this with the new phone, or the new phone says scan the old phone with this, and it'll transfer the data. That's all a signature blockchain, individual blocks that are creating that picture to transfer the data over the cloud. So just like that, Bitcoin has its own signature blockchain that just organizes these blocks into a specific sequence based on the algorithm that's supposed to be able to prevent the tampering of each of these coins and be able to use them for transactions. So it has a signature ID linked to that coin.
Yeah, and I think another thing that's attractive to people with the Bitcoin pitch is the privacy of transactions. You know, the credit card, even though it's a non-dollar transaction and it's very secure as long as you're not foolish about how you use your credit card, Bitcoin is very secure in that no one's going to know about the transaction. To the extent where if you lose your password to that Bitcoin account, you've lost your money basically. I know there's recovery services out there, but you need to they just try to help you remember your password. So, and the other thing about privacy that I think is the downside for me is I can't respect Bitcoin at this point because it's the number one commodity or currency for human trafficking, drug dealing, ransomware, and a lot of other bad stuff. So it's not like it's not like the realtor called me up and says, "Hey, we're getting offers for your house right now, all cash offers for 11 Bitcoins or 12 Bitcoins." No, they're calling up and saying, houses in your neighborhood are going for 1.4 million or 1.1 million or 800,000. They're still talking in dollars. So the real world has not yet fully adopted this avenue of transaction.
Yeah, and I think the real pros of Bitcoin comes down to cost efficient and fast. You can do those in a snap of the fingers, digital transaction. It all happens almost instantaneously. And then the other thing is back to the whole fiat currency, decentralized currency, meaning that it's not tied to a specific government or any specific country. So some people view that as a con also because it's not regulated really anywhere. But it's also the fact that if a country does poorly, you're not going to face the fact that that currency is what your dollars are tied to. So it's kind of a global marketplace currency for those who own it. And then the last thing is it has growth potential because it's so new and a lot of people believe that it's going to be the future. A lot of people are seeing it as, hey, you know what? It's a store of value that can grow more so than the US dollar. And I think that's kind of the same reason we can hit a little bit more on price volatility, John, in a second here. But I think that because it can grow so much, there's also that price volatility side of things. But it's why people say, hey, I can make money in this more so than my dollar, which has a lot of price stability, which is why people widely accept it as regular currency.
Yeah, and it's really a speculative trade, right? It's not like going out and buying a business, and I got to be careful not to mention any stocks or businesses, or else we have to bleep them out and all that. But I sarcastically ask people all the time that say they love the idea of Bitcoin. I say, well, yeah, I love their earnings and their track record and their management team and their patents and their pipeline. And they say, what are you talking about? They don't have any of that. I said, bingo. It's just that you're buying it in the hopes that some other sucker is going to come along and pay more money for it than you paid. And that may happen, because I said that at 50,000 and now it's 100,000. I've got people telling me it's going to 1 million. And I've got people telling me that they've already priced in all the good news that the current administration is talking about Bitcoin, and all the people talking about all the good news is already baked in. And I'll give you an example without mentioning the name. At the beginning of COVID, there was an exercise equipment company that went up like 40-fold because everybody was going to use this exercise equipment at home. And then someone came out and said, this is priced as if everybody's going to buy 5 pieces of it. If they're going to buy this exercise equipment and put it in their bathrooms, and in addition to their living rooms and bedrooms. And it got ahead of itself. And so then it came crashing back down to reality. So I can just as much argue that Bitcoin is fully priced, overpriced, or if these other guys are right and it goes to 1 million, that's great. When it gets there, I'm sure my mutual fund companies that own solid businesses that make food and other things, they're going to own it as well for a sleeve of the portfolio. And so that's how I'll participate. I'm not going to be the one that goes out and tries to pick which crypto I want to own.
Yeah, and I think we'll get into that a little bit more kind of down the end, but I think really the pricing volatility, back to that topic, is the reason why no one's transacting their homes really in Bitcoin. I think it'd be foolish to go out and say, hey, I'm going to go buy a car for $50,000. I buy that car and tomorrow Bitcoin is worth 60,000. And now I just paid basically an extra 20% on top of that purchase, a little bit more. And said, hey, the dealership feels great about it. Or on the flip side, the dealership accepts it and it's worth 40,000 the next day. And they say, man, we got off on a bad deal on this one. We can't believe we took Bitcoin for this. So I think until the pricing volatility stabilizes, it's not going to be a widely accepted currency. It's going to be more of that speculation, like John is saying. And then same thing with passwords, losing the passwords. The other con is there's hacking concerns. Anything that has a password in an online account is something that can be hacked. And the blockchain technology is secure for now, but hackers get better and better every day and figure out things every day of ways to separate people from money because that's just what they do. It's how they get to money. So I think at some point in time, hacking concerns are going to be increased outside of just the fact that you can get somebody's password to something with relative ease these days. So
Yeah, and I think back to I'm still stuck on this whole cons side of it. I often talk about the fact that Sony Betamax had the leading technology and the best tape for watching a movie, and people went out and bought Betamax machines for $1,000, and they got the Godfather collection, and they got Ben-Hur and The Wizard of Oz and all these great films on Betamax tapes. And then 2 years later, VHS came out with a cheaper, more affordable product and blew the doors off them, and that was the end of Betamax. And Sony can afford to lose that money. I'm not saying that these other cryptos like Dogecoin and Ethereum are going to beat that. But now there's like 98 little ones out there. And then one more comment about Bitcoin. It is now bigger than the largest oil company in the world. And I don't even know if they're publicly traded. I won't mention it, but it's in that country in the Middle East that we all know as an oil country that has 100 times the reserves in oil of Exxon and Chevron put together. And Bitcoin is bigger in value than them. And they own refineries and ships and pipelines and patents and the reserves. So is Bitcoin really that valuable? And can it go 10 times from here? I just have a hard time believing it. But now there's great fund companies out there that are starting to put an allocation in there. But the good thing is they're not going to put 100% of my money in there. So if I own that fund, I might be getting 100,000 in that fund. I might have a $3,000 exposure.
Yeah,
That's
and just
my
to
my thought on that.
kind of give a similar example of that, just for the different generations that might be listening to this. Everyone, when I was getting to cell phone age, owned a Motorola Razr. They're making a
Right.
comeback right now,
I
and
bought that phone.
yeah, everybody had a Razr phone, and if you wanted to be in the in crowd, you had to have a Razr. It was the slim phone that fit in your pocket, didn't make a bulge in your pants of any sort, and you just had to have a Razr. And iPhone came along and absolutely demolished it. And I'm sure that if you look at the performance, I'm not going to get into actual stocks here, but you can just say that the market cap and the market share that of those phones just got completely beat. So it's the same thing as the Betamax story, that you lost market share really quick because something newer, better, more exciting for whatever reason comes along. And it's just too easy for something like that to happen with something like Bitcoin, in our opinions. And I think that it's, again, we're not saying not to get it, but we're not saying that we feel comfortable with it. We think it has just as much potential to go to 1 million as it does to go to zero. So that's just not a risk that we're willing to take in most of our clients' accounts. And we'll kind of touch on what allocation would be okay and what we see as worth the risk, and then why we think it doesn't really make sense to be overly concentrated in those positions once we kind of hit a little bit more on why this is such a big topic right now. So, John, do you want to kind of touch a little bit to start on the crypto regulation in the US and why
Yeah, just a couple quick
become
points on this. It's not FDIC insured. It's not protected by SIPC, which your securities accounts are. The current administration's emphasized we're going to be a crypto capital. They haven't really defined what that means yet. And like I said, that may have caused that certainly has gone up robustly since they've been elected, even before the inauguration. So those are some of the things that have popped up there in the regulation space. And then they're talking about a strategic reserve, right? Like just like they have a strategic petroleum reserve, they're saying that they want a strategic Bitcoin reserve, and they're also talking about a sovereign wealth fund, which if you don't know what that is, that's just kind of like a big investment pool, well, that the government starts just putting money aside and investing it, like a private industry or a private family would. The last thing I want right now is my government going out there and loading up on Nasdaq and the blue chips and things. I want them paying off the nearly $40 trillion in debt they've created over the last 30 years, so 40 years. So that's what we need to do with the money, not start a portfolio. Those are just some of the little tangents I'm going off on about this whole process with the coin. And then I mentioned there's so many other little ones out there. Who's going to regulate those, and who's going to see who's transacting, and they're going to expand the IRS to be able to say, hey, this guy bought $50 worth and he sold it for 300. He's got a $250 capital gain. How is that even going to be manageable at some point at the government level?
Yeah. And I think really the target allocation, kind of jumping to the next topic of what we see as fit in most clients' accounts. And we're not going to be cookie cutter, so I'm going to give you a little range here, but anywhere between, if you say we absolutely have to have it, 1 to 5% in the account. You don't need anything more than that. And I'll tell you exactly why. there's two separate groups that we're really going to kind of give the reasoning behind on this. I'll start with that young group of investors that are kind of feeling disgruntled with the current state of things. Everything feels super expensive, and they've seen Bitcoin as their way out, the get rich quick type of method. And the problem is a lot of, if you would have bought it back in the day, yeah, maybe you would have got rich quick. You sell now at 100,000, it would have been a great return on investment, and you would have been stoked with it. I think the first problem is most of the people that have ridden that wave think that, hey, it's still going to go up, and it kind of enters that greed, buy, fear, sell cycle where you're so greedy at this point of I've owned it, it's done well, why would I stop believing in it now? I'm going to ride it to the moon. I've heard all the comments at this point of it, but that doesn't mean because it's done well that's going to continue to do well. So I think that a lot of the people that are young have almost all of their assets in this. And why would you want to own something that could just as easily go to zero as it can go to a million? Yeah, if it goes to a million, great. But if it goes to zero, you're back at square one. You spent the 8 to 10 years of owning your Bitcoin going from very, very little bits of money to 100,000, and you willing to let that get wiped all away? No, if you can mix it into something diversified and you got your first 100,000, which is always the hardest to get the first 100, and now you can let compounding interest take over with something proven and something reliable that's survived for more years than under 20, why not do that? So I think that's the main reason for the young crowd. And then John, what about retirees? Why does it not make sense for most retirees to at least have a concentrated position?
Because, and I would argue the 1 to 5%. I would argue it should be 0 to 1%. I would include a zero in there, and that would be for the retirees. Because if you've won the game, you've won the game. Taylor was very happy that his Eagles won the Super Bowl, and I pointed out to someone last week in the Bitcoin conversation that I didn't see them throwing bombs in the fourth quarter trying to get touchdowns. They had won the game. They were handing it off and clipping 3 and 4 yard runs and running out the clock. And so, sorry to use the term running out the clock for retirees, but that's what we do, right? We're those of us above 60, we don't have to hit 10 baggers anymore. We just have to make sure we don't make a mistake and shoot ourselves in the foot. And I went out and I heard that a certain demographic was buying Bitcoin. So I said, I don't know how true that is. So I Googled it. And here's what I pulled it up on the screen for today. Who is buying Bitcoin, comma, the demographics, question mark. And here's what comes up. It's tough throwing numbers out on these things without showing them. So I apologize if numbers go really fast, but white people, 62%, Hispanic, 24%. That's almost 90 right there. Black and Asians, the other 14%. And by the way, it's Black 8, Asian 6. But more importantly, when I Googled further, and it's not on this search, but it was white males, 25 to 35. And that feeds into Taylor's comments about, I don't have the opportunity in this country through the 401k like my parents and grandparents did. I'm not going to be able to buy a house and have it appreciate and get the mortgage paid off. And, so I need something that's going to get me there quick. And that's the appeal of Bitcoin. And that works until it stops working. And my last comment would be, if anybody believes it wouldn't stop working, just Google Tulip Mania 1637 and look back at what happened with the tulip bulbs. I know there was a movie about 5 years ago about it, or probably 10 years ago. But tulip bulbs went from one tulip bulb buying you a cup of coffee to one tulip bulb buying you 2 cows. And then all of a sudden, the tulip bulb market crashed, and people were left with hundreds of tulip bulbs that were worthless, and they had traded half their farm for it. So I'm not saying that that's where Bitcoin's going to be, but it certainly feels tulipish to me at this point. So I've won the game, so I'm not buying any, but I'm willing to own it as long as, XYZ mutual fund company is buying it for me so they can watch over it while I'm talking to you guys.
Yeah, and I'm not going to pass up an opportunity and not bring up the Super Bowl again. So I think my favorite story of just risk in general right now is the fact that we were sitting there watching the Super Bowl, and my father-in-law turned to me and said, "Why is Jalen Hurts not in anymore? Why is Kenny Pickett coming into the game? They're not going to play all off season. They're going to have plenty of time to rest. Why are they resting him now? And I said, it's not about the offseason. It's about the risk you're taking. You tear an ACL, you miss the entire offseason and start of the season this late into February. So there's just, when you have that level of risk where something, just like I said before, has just as much potential to go to a million as it does to zero, just like the Eagles, that game was long over. You're not going to keep the potential to go to zero and risk your starting quarterback for the next season and your starting players for the next season just to score a couple extra points. It's time, if you're young, to take some money off the table, diversify it. If you're older and you're retiring, it's not time to go out there and start buying it and saying, hey, let's get it in the account. It's time to stay healthy for the next season and be proven and ready to win in the future, not just for today.
Yeah, and I would have one more comment. Even though you heard me say I'm against it, I'm not against talking to you about it or anybody in your family or circle of friends. So we're happy to discuss it. And if you called me up and said my Atlantic City or my Vegas weekend was canceled, and every year I take $3,000 up there and try to blow it, come back with either a little more or a lot less. So I have that $3,000 because that weekend was canceled. And you want to throw that $3,000 at something like this that you're willing to lose, that's great. And if it turns out to be a home run, congratulations. Once it gets to be worth, 5 times more than you put in there, we'll ask you to take your 3,000 out and bank it again for next year's Vegas weekend.
Awesome. Well, thank you everyone for tuning into Financial Tides. We hope this got you guys some information about Bitcoin and the different cryptocurrencies that are existing right now. We know it's a hot topic, so we wanted to bring some information to you guys. If you have any questions, you know where to contact us. And thank you for watching another episode of Financial Tides. We'll see you next time.
John Perillo and Taylor Perillo are financial advisors offering securities through Cetera Advisors LLC, a registered broker-dealer, doing insurance business in California as CFGA Insurance Agency LLC, member FINRA/SIPC. Advisory services offered through Cetera Investment Advisors LLC, a registered investment advisor. Cetera firms are under separate ownerships from any other named entity. California insurance licenses number 0F60123 and 0M90666, 6265 Greenwich Drive, Suite 251, San Diego, California 92122. The views depicted in this material are for information purposes only and are not necessarily those of Cetera Advisors LLC. They should not be considered specific advice or recommendations for any individual. Neither Cetera Advisors LLC nor any of its representatives may give legal or tax advice.